Hello everyone and welcome to the Handtech Markets educational webinars. This is the first webinar in the series and we'll be covering trading with Trendlines. Now, Handtech Markets, we decided to put together a series of webinars that would help traders with a few technical indicators and give them a gauge exactly how to use them. And hopefully to profit from their use. Now, as I said, this is the first one in the series of 10, and we'll be doing them every 2 weeks over the next few months. Yeah, hopefully you'll find them educational and useful and will benefit from their use. Now, the first thing I need to say is that this is the disclaimer, because basically I'll be using also theoretical analysis of the trend lines, but also be applying them into the real world and on charts in terms of real-time analysis. And for that, therefore, I need to give you my disclaimer. So here it is on the page now. So I'm also going to show you that at the end of the webinar as well, so in case you miss it this time. Just a little bit of background on me. I wouldn't, if possible, look at that picture. However, my career has basically been 13 years in London, in the city, doing analysis of equities and the Forex. Originally trained in the art of technical analysis, and I've now moved on to become also fundamental analysis as well. So it gives a broad strategist point of view for the market, which I find very useful, and I think it is to my benefit from that. I've got the STA diploma, which I achieved a distinction, and also I've got the PCIAM qualification as well, which is also an investment management qualification. The agenda for this webinar is we're going to do some basics, some trendline theory, and then we're going to cover some time frames. We're then going to do some trend lines in practice and put the trend lines onto some of the charts, and then do a live market analysis, at which stage you can ask me questions about my opinions on the markets and how they're going. So that's basically what we're going to be doing today. Just starting off very quickly, just with uptrends and downtrends really. What is a trend? It is a straight line which covers at least 3 points. I think it's important to be at least 3 points, because 2 points already is a straight line anyway without a third point. I do not believe you've got a proper confirmation of that straight line. So in that, a downtrend, for example, is a series of lower highs and lower lows. And you connect the lower highs on this diagram. You connect here 1, 3, and 5 to make the downtrend. For an uptrend, you've got a series of higher highs and higher lows, with the peaks and the troughs all rising. And in this case, you've got 1, 3, and 5 on the uptrend, being all the connection of the troughs on the lows. Furthermore, you need to be thinking about what actually trend lines are. Now, trend lines began life through Dow theory. Dow theory is one of the basic tenets of technical analysis, and the concept of that everything is in the price, everything, all the information is already factored into the price. So therefore, all you need to do is ascertain how the chart is moving through the trend to distinguish where the price is going. Hence you get trend analysis, and that is how it arises. The point is that the more points you have of connection on the uptrend or the downtrend, the higher the conviction it is. So we need to, say for example, get if you've got 4, 5, 6 points of connection to the uptrend, you've got a very strongly configured uptrend there, and the higher conviction is. However, also you've got the higher the conviction you get where you actually get a breakdown of that trend. So once that trend line gets broken, you get a much higher conviction within that breakdown. So that is also very important. So basically you get an you identify the trend, but also you can identify reversals of the trend as well. There are accusations of trend lines being subjective. Technical analysis has accusations of being subjective pretty much throughout its course of history. However, I think in many ways, I think that because you can have different analysts getting different trends out of different prices, I think that all adds to the whole melting pot of what makes a market, and I think that ultimately proves to be of benefit to the market. So I think the fact that you can have different analysis suggests that actually I think is a good thing ultimately. Now, over which time frame we need to be looking at trends? Well, you've got short, medium and long term, and basically it depends on whether you're looking at equities or Forex for that. I think for equities, for example, you can have a long-term primary long-term primary trend, which can last between 2 and 5 years, whereas in Forex, because of the shorter-term nature of the trading, is far less of a duration for the trends, and generally you see that with Forex is maybe 6 months for a primary trend or a long-term trend. Now, so therefore you've got what I will show you here is primary, secondary, and tertiary trends. You've got the long-term primary trend. That was this is cable. So you've got the long-term primary uptrend in place here. You've then also got the downtrend in place here, which is the secondary trend, and subsequently the secondary trend is corrective within the primary trend, and also you've got the tertiary trend, which is the near-term trend, which comes in and can be either corrective or with the direction of the trend. Now the primary trend on Forex is maybe 6 months in duration, secondary trend maybe 2 to 3 months, and the tertiary trend or near-term trend can be anything up to maybe 1 to 3 weeks. So that is what we see there. Now, this is on a daily chart. Trends also work nicely on the hourly chart as well. This is cable on an hourly basis. You see the numerous points of contact on the hourly chart here. Also, what is interesting here, you've also got once the trend line gets broken, it becomes an uptrend, for example, would become the basis of resistance once it's been broken, and that is exactly what we've seen here in cable back in early May. So that's interesting. Now, do trend lines work across monthly? On much longer term basis? Yes, they do. This is weekly for cable. And you'll see several trends that I've drawn in here over the course of the past few years. You actually got a very well-defined uptrend channel that lasted 2 years between 2006 and 2007. You've got a downtrend that's recently been broken and subsequently also been used as the basis of support on cable. And even further back into the 90s, you've got a big uptrend channel that formed throughout the 90s. So you do get trends that run the course over short, medium, and long-term basis. Okay, so what are we looking at the moment? This is cable over the past, as I said, since November. We've had this very well-defined uptrend that's been in place, and since that time, actually today, we've seen that trend broken. So if you zoom back in quickly here, you've seen a sharp breakdown of that trend, and that's happened today. And basically, we're seeing that the move is breaking down this trend, which means that we now need to reassess how the trend is and whether we need to start to think about this turning into a downtrend. Now, this is a significant breakdown, I believe, on cable, because it's been such a big breakdown move to the downside, and I think that ultimately this could prove to be a significant change in the outlook for cable going forward. Now, looking very quickly at the trends on euro dollar. Euro dollar is in an interesting point at the moment. I've drawn in a downtrend that euro dollar has been in. That's not a great one. I will realign that because of time-wise. In fact, no, I don't. I'll redraw it. So we've got a pretty good quality downtrend in place on euro dollar now. Now, euro dollar has previously been in a big long-term uptrend, and that has previously been broken. This is hourly. I'll change it to daily. It does actually work much better on daily. This is the uptrend that euro dollar has been in, and that's broken. And subsequently also the breakdown of that support at 36.71 I think is a significant move. Now, supports and resistances are something we're going to cover in the second webinar, so I'm not going to labour the point too much today. However, it is certainly something that we need to be focusing on in euro dollar because it's such a big breakdown of that support. So that's what we've got there. Euro dollar has subsequently also broken the support that came in at 36.41 as well. So it looks like it's now beginning to form a new trend because you've broken that uptrend. I've drawn in this trend here that we've got going on. It's not a particularly strong trend at the moment. It's only a very short-term, near-term trend, but it could ultimately start to form something more significant in due course, because I think euro is now certainly on the selling pressure, and there is further downside pressure in due course on euro. So that is euro. I'm going to look quickly now at Japanese yen. And dollar yen has been in this big uptrend since February 2013, so a long uptrend on dollar yen, and that is now broken, and it's now beginning to form this new downtrend. So very interesting on dollar yen, and that's just fallen over in the last day or so, and I think that this is now also interesting with the fact that you've had this pullback that almost hit this uptrend once more and is falling over again. So I'm getting increasingly more bearish on dollar yen due to the fact that you've got this broken uptrend and this new downtrend that's forming. So I'm expecting now 100 spot 80 to be tested in due course. Just to reiterate, just had a question that I've sort of almost focused on already, but talking about the fact that what happens when trend lines get broken. With the trend line that gets broken, you then start to, say for example you're in an uptrend. Once that uptrend is broken, you then start to use that as the basis of resistance again. So you need to keep these trend lines on your chart even though they've been broken. So because they do have a very significant habit of being retested in due course, and you could well see that happen. So what we're seeing on dollar yen is this new trend developing, and I'm going to be keeping an eye on that in due course. Okay, so we're going to look at a few of the indices now. So S&P, SPX is our code, and the S&P has been in this long primary uptrend for ages, back to November 2012. Very long primary uptrend on that, and it has been in that. Continues to use that as the basis of support, pushing higher, breaking out to new high ground. So very positive move on the S&P 500. Ultimately, whether it can hold on to that move, we'll wait and see. Technically speaking, I think the S&P looks very strong, although I think I don't think there's a great deal of volume behind the move. that's seen the breakout in recent days, so that is a little bit of a concern for me, but we'll wait and see how that goes. DAX is another one I'm going to look at, which has again broken out. You can draw this primary uptrend here that dates back to June 2012. Zooming in slightly here, you've also got an uptrend. This is a shorter term uptrend that's in place here, and we've had this strong breakout above all these old highs, and you'd be looking to use this support of this uptrend as the basis of support. That currently comes in around 9,700. So there's good support now between 9,800 and 9,700 on the DAX. So very good breakout there on the DAX. Now Footsie, I think, is a different element there. Footsie has struggled. Footsie has been in a bit of a struggle to break out. The equivalent highs on the DAX for Footsie have not have held Footsie back. You had a slight breakout last week, but no real conviction behind it. You do still have these big uptrends. In fact, the Footsie uptrend goes all the way back to 2009, the ultimate low. There's a big major primary uptrend that currently comes in around 6,300, 6,400. But then if you zoom in a little bit closer, you can draw a tighter uptrend that currently comes in around the 6,650 mark, 6,600. So there are a couple of long-term uptrends at play on Footsie, and that's what we're seeing at the moment. Okay, so finally we're going to look at gold for you, and gold is in a bear market. You've seen this. Zoom out very quickly. Long-term gold bear market had been in a bull market from 2008 to 2012, and now subsequently it's turned into a bear market, and that is very much dragging gold lower. And even in the past few days, just got another question on gold, talking about the can you draw in some trend lines on gold? Well, here they are. These two converging trends on gold, near-term trends. Actually, if you're going to take it literally, then they have formed a symmetrical triangle, which is subsequently broken down, and that gives us some downside targets of basically back towards 1230, between 1230 and 1245 on that breakdown. The move lower on gold has broken that key support 1268, which now also just reaffirms the bearish control, and I think gold is now something that we should be selling into strength. I think it's very looks fairly negative on that gold chart. So I think that is a pretty comprehensive look at the trends that are at play in some of the major indices and forex markets. Just to ask if there are any more questions that people have been asking. There was there's one from earlier. What happens when or how accurate do you need to be in terms of your drawing of trend lines? Well, trend lines, the more accurate the better, yes, and I think I'm going to illustrate this through the S&P 500, because I know on the S&P 500 that there, in the primary uptrend, it had a slight breakdown, very slight breach there back in February 2014, but subsequently the trend ultimately held. And to be honest, when you're looking at the very long-term charts, you don't need to be absolutely to the point, it is not necessary to start breaking down your trends and saying your trend lines have been broken just because you've had a move there. And also, one of the rules that I like to use in technical analysis is a 2-day rule. For a long-term technical top pattern or a base pattern or a trend line breach, I like to see a 2-day breach or on a closing basis. And if you haven't got that quite often, that would suggest that there's no real breakdown of that trend at all, and it's just a minor blip within the move. So just keep that in mind, that you don't have to be so as I said, on these longer trends, because they've been going, some of them have been going on for years. For example, so this S&P 500 one will be going on for years. It doesn't need to be absolutely to the point or the pip with your analysis. So just keep that in mind there. Okay, so are there any more questions? Just wait briefly here. If not, then thank you very much for watching. The PDF document that accompanies this webinar is very important. It contains a lot of information that I think you would find very helpful, and I think you need to make sure that you read it, and if you are coming on any future webinars, then it'd be good for you to read the document before the webinar to give you a bit of background as well, because I'll be covering stuff that is in the PDF but also just outside it as well. So, but it does give you the basis of the webinar. The next in the series is on Wednesday, the 12th of June at 3 o'clock. That's on the secrets of support and resistance, and a very important webinar that is too. Support and resistance are two key elements of technical trading. So just keep that in the back of your mind for something that you should be visiting. You can also follow me at HandTechRich on Twitter, where I'll be giving my views, and I do daily videos and stuff, so you can follow me there. And if you've got any comments or feedback, then please send them to @marketing@handtechfx, because we are tailoring these webinars for you, and if you do have any constructive criticism, then we would be happy to try and incorporate it for the next one. So yes, please do help us out to help you. Okay, so I'll leave you with the disclaimer once more that you've got here. So please read that. As I said, I've been giving some live analysis, so this disclaimer is very important that you should read. So you are fully aware of what we've been talking about today. Okay, so other than that, I wish you good luck, and thank you very much for being with me today, and I will speak to you in a couple of weeks' time. Thank you very much. Bye-bye.